When we think about taxes, our minds usually jump straight to rates and percentages, right? But what about the rules of the game? The stuff in the fine print, the deadlines, the official notices? Well, today we're opening up the taxpayer's toolkit. We're going to turn all that complex administrative jargon into a set of simple tools that can save you a whole lot of time, money, and stress.
All right, let's kick things off with a scenario that I'm sure feels familiar. Your tax payment is due on a Saturday. No big deal, right? You just handle it on Monday. Well, depending on the situation, that simple assumption could be a very expensive mistake. And that one little example shows you just how important it is to know the administrative rulebook inside and out.
So, let's grab the very first tool from our kit, the official calendar. Because before you can even think about hitting deadlines, you have to understand how the tax authority defines time itself. Specifically, what actually counts as a working day.
Okay, so the official definition is pretty straightforward. A working day is any day that isn't a Friday, a Saturday, or a public holiday. Simple enough. But, and this is a big but, the real secret is how this definition gets used. Because, believe it or not, it's not applied the same way to everything.
And here it is, the critical distinction you absolutely have to know. When it comes to the big stuff, filing your return, or more importantly, paying your taxes, the deadline is the deadline, period. If it's due on a Saturday, it's due on a Saturday. But for almost everything else, say responding to a query or submitting some other form, the rule is different. If that deadline lands on a weekend or a holiday, you get a little grace period. You can take care of it on the next working day. The takeaway here? When money is involved, the clock is strict. For paperwork, there's a little more breathing room.
All right, our next tool is all about getting rid of guesswork. Imagine you're about to make a huge business decision, but the tax implications are murky. Well, you don't have to just cross your fingers and hope for the best. There's actually a formal way to ask the tax authority for an official opinion before you do anything.
And this is such a powerful tool for any business. Seriously, it completely flips the script from being reactive to being proactive. You can literally go to the authority and say, look, here's what we're planning to do. Can you tell us how the tax law sees it? It is all about getting clarity and minimizing your risk before a single dollar ever leaves your bank account.
And the process itself? It's surprisingly simple. You just submit a written request. And right there, you make a crucial choice. Do you want a private ruling, which is kept completely confidential between you and the authority? Or do you want a public one, where they hide your identity but publish the decision so that it can help guide everybody else?
Now, just because you ask doesn't mean you'll automatically get a ruling. The authority basically runs through its own internal checklist. They're asking things like, how complicated is this issue? Is our answer going to help a lot of people or just this one company? Did they give us all the info we need? And, just being practical, do we even have the time and people to look into this right now? It's a really interesting peek behind the curtain.
But here comes the single most important thing to remember about this whole process, and it is a big one. A ruling is fantastic guidance, but it is not legally binding. Let me say that again. It's not legally binding. That means the authority could, in theory, change its mind later. And it also means you, the taxpayer, aren't locked into that course of action either. Just think of it like getting expert advice from the ultimate source, not signing a legal contract.
So you decide you need to bring in a professional. You're probably going to hear two terms thrown around: tax representative and tax agent. And while they might sound the same, in the eyes of the law, they are worlds apart. And let me tell you, picking the wrong one can have some major consequences for who's on the hook.
So here's the bottom line. A tax representative, who's usually appointed by a non-resident, is jointly liable with you for the tax. That means they have real skin in the game. But a tax agent, who works with residents, just acts on your behalf. And this part is critical. You, the taxpayer, are still the one who is ultimately and solely responsible. Getting that one distinction right is absolutely everything.
Okay, next tool in the box, understanding the rules of communication. Because when the tax authority sends you a notice, how they send it, and more importantly, when the law says you've received it, is a really big deal. It sets the clock ticking on your deadline to respond.
I want you to really focus on this one sentence from the regulations. It is one of the most important ones for any taxpayer to understand. See that key phrase, received, on the date on which the notification is sent, not delivered, not read, the exact moment it is sent.
So what does that actually mean for you in the real world? It means that the instant that email leaves their server, or the second that letter gets a postmark, your deadline to respond has officially started. It's like a starting pistol is fired. This puts all the responsibility on you to be constantly checking your mail, your email, your official channels. because letting a notice sit unread for a few days could burn through your entire window to reply.
All right, for our final tool, we're going big. We're going to tackle how the system handles massive changes, like a whole new tax rate being introduced. Now, the transitional provisions in the law might seem like ancient history, but they're not. They actually give us a universal playbook for how to handle any huge systemic change in the future.
Think about the chaos when a tax rate changes. You've got all these contracts that were signed under the old lower rate. Then, boom, a new higher rate is announced with a future effective date. So, what happens to all those deals already in place? Well, the law creates a bridge, a clear framework that often lets those old contracts continue at the old rate until they naturally expire or come up for renewal. We can actually boil down all those dense, complicated rules into a few core principles that you can always rely on. First, the tax rate is almost always based on the date the service was actually performed, or the goods were delivered, not when you sent the bill. Second, there are always special, temporary rules to manage those pre-existing contracts we just talked about. And third, the authorities will always set very clear deadlines for things like getting registered under the new system. These principles are basically your compass to navigate through any period of change.
So after all that, what's the big takeaway? It's pretty simple, really. Being good with taxes isn't just about knowing the right percentage to pay. It's about mastering the administrative game. The deadlines, the communication rules, the procedures, the how of it all is every single bit as important as the how much.
So, we've unpacked the toolkit, we've laid out the rules of the game, and once you see them written down, they're actually pretty clear. The final question then isn't really about the rules themselves, it's about you. Now that you know them, is your business truly ready to play?